Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that responsive buyers have been quite active and dominant heading into the open. We have initial resistance at 47 to 49, and a breakout above that zone would confirm the short-term strength and bring the upper resistance zones into play and open the door for a test of the 63-quarter naked VPOC and the 65 to 67 zone. As far as the 55 to 57 zone goes, that area calls for caution, but if the other markets are hitting major resistance or better resistance as ES is testing 55 to 57, then it could still provide a decent setup. So if NASDAQ, for example, is testing the recent swing high around 40.41 to 40.46, then that would provide perhaps a better setup at 55, 57. But if NQ has already taken off to the upside and then ES starts going higher, then 55 to 57 would be an area for caution, and 65 to 67 and 63-quarter would be areas where there can be a better response. But how ES reacts to 47 to 49 is really going to help set the tone. ES needs to take this area out in order for the buy side to really gain control. Right now, we're still at a spot where there's potential for failure, where the other markets and the S&P can potentially still fail. NASDAQ has been short-term stronger than the S&P, so we'd also like to see NQ heading lower in order for ES to really get some selling pressure. Right now the way the markets are set up, they are at important inflection points with ES and the Russell being at better spots. NQ has been leading on the way up, but 47 to 49 continues to be active resistance until it's taken out. On the downside, we have pre-market support 37 to 39, and if the market is heading down there yet again on strong downside momentum, then those are not necessarily going to be spots to buy the market. Right now, either the market can fail at 47, 49, and then the areas below would need to be taken out to confirm that failure, or ES simply hangs here and breaks out above 47 to 49. So we're at a short-term inflection point, and if we fail, then we will need to be cautious on long setups on the way down. 37.39 is the first area of support, and if ES takes that out, then that would be the first signal that sellers are stepping in with some more force. A break below 32.5 to 34.5 would confirm the overnight breakout attempt, which would have failed by then. And then below that, we have the gap fill at 24.5 and then support at 20.23. The market would be exhausted into 2023. So as long as we haven't really balanced for too long ahead of it, 2023 is an area where responsive buyers can be active. First test. Below that, we have some support 1475 to 1675. Not really a major area of support, so it calls for caution. And then 10 to 11, and then the larger time frame support is 02 half to 05 half. So right now we are going into the open with a neutral bias, and 47 to 49 is really the spot that can be a hurdle, and it still can be a point of failure. So if that gets taken out, then we have to be more conservative on the short side and be a little more careful, because that could open the door for a move all the way up to 63-quarter and 65 to 67, which on first test can still provide a nice reaction. Right now, given the higher volatility and the higher volume, even the tradable reactions that we're getting off the zones are quite good, and they're for the most part all providing 2 to 3R, even if you're using a 3-point stop. So right now the opportunities are good, but we do have to watch this 47.49 to help determine whether the market is going to break out or it can technically still fail at this 47 to 49 area. So that's really going to help set the tone for the day. And then on the downside, if we start taking out pre-market support, micro bull bear, that would confirm the failure. Those zones do need to be taken out in order to confirm a failed breakout attempt, and then we can get some better movement on the downside. So those are really the main ideas heading into the open. Let's see how the market reacts here to initial resistance, and we'll take it from there.